Welcome to the latest stage analysis video. It's Monday the 1st of January 2024, so happy new year. I'm going to start this week's video with a look at the major indexes to get a picture of where we are in the market in terms of the stages of each of the major indexes before getting into the more regular member content. Industry group relative strength rankings, the Bullish Percent bell curve for the IBD industry groups. Have a look at what's been going on in the market breadth, as well as the watchlist stocks. And I wanted to look at Bitcoin and Ethereum as well, as the crypto stocks have been leading the recent rally. So just wanted to see how they're shaping up and what part of the stage that they're in at the moment. So back to the major US indexes here. So S&P 500 starting off as always at the bottom of the chart here, this area down here, I've got the custom combined percentage of stocks above their 50-day, 150-day and 200-day moving averages in the US market. So this uses the NYSE and the Nasdaq composite stocks, so it's just over 5,000 stocks, and gives you a really good idea of what's going on a short, medium and long term basis compared to the moving averages. So as a proxy with this, what we do with the member services, when we're above the 60% level, we tend to be in the stage 2 zone. When we're in the 40 to 60% range, you tend to be in a more neutral stage 1 or stage 3 type environment, and when you're below, you tend to be in the more stage 4 type environment. So it's a broad market measure, not so much obviously above the chart here with the S&P 500. You can see the S&P 500 went through stage 2 when the broader market was still in the more neutral range earlier in the year, as did the Nasdaq 100. And again, as we started to move back into the stage 2 continuation here, the broader market only just started to make a stage 2 continuation more recently here. So we'll see that when we look at the likes of the NYSE and the Russell 2000 charts, as well, as they give as the additional context to the broad market. But last year was very much a big stock year in terms of the Nasdaq 100 led by a long way. I think finished up over 54% at the end of the year, whereas the S&P 500 had a strong year, but in more of a normal strong year for the S&P 500, whereas the Nasdaq, I think, was the best year it had in the last 20 years, since back to around the 1999 type periods. So if we go into the S&P 500 here, you can see made a stage 2 continuation more recently, whether it was above the pivot here or this lower pivot. I prefer to use the higher pivot when it's coming back out of stage 3. So had a failed attempt to move down into stage 4, which shook out. Big spring type action, came back in, start of that early November move, followed through days, market breadth improving, etc. Lots of signals in the short term breadth, and the member service, we had a good idea of what was going on there with the various short term breadth measures. So continuing to make a stage 2 continuation break towards the all-time highs here. If we look at the top back here, it's very close to all-time highs, so closed just off of that, just under around 1% or so from the all-time highs, which happened in the first week of 2022 here. So pivotal point as we go into the new year for the S&P 500, and Nasdaq's already above that. The broader market, as we can see, has moved into stage 2. Doesn't necessarily mean it's going to hold. We saw earlier in 2023 we had a similar picture at the end of January into the early part of February, and it started to roll back over again. But at the moment we've got over 68% of stocks above their short, medium and long term moving averages, as the S&P 500 tests its all-time high. The Nasdaq is already above that level, but extended in the short term. We've had 9 weeks in a row here since the move off of the swing low at the end of October there, which is not been seen for quite a while. So short-term consolidation or pullback would certainly be healthy and expected as you test the highs. Whether we get that or not is a different story, as people may start to rush back in, seeing the recent rally. But it all depend on what happens in terms of rotation going into the start of the new year. I talked about in the post today about rotation at the start of the year being a big factor. We want to look out for where any emerging themes are coming, where the volume is going into, which stocks potentially are emerging as new leaders. So it'll be an interesting first few weeks of the year as the volume comes back into the market and the institutional traders start to get back involved again after a little break over the Christmas festive period. So at the moment on the daily chart, still hovering above the +2 ATR level. So we mark the +1 ATR level here on the daily chart as what we consider a short-term uptrend. So the whole way up through here, it's been in a short-term uptrend with only a brief dip back below there. But at the moment in a strong position, but testing the highs. 87.4% of stocks above their 20-day exponential moving averages here, and you can see when we're in a short-term uptrend, the majority of the time the percentage of stocks hovers above that 70% level with a few brief dips back into the middle zone. So as long as it doesn't start strongly moving back below the 50% level, that's a sign of a short-term uptrend, whereas on the opposite side of the scales, when it's below that midpoint in the lower half of the chart, in the lower end of the scale, tends to be in a short-term downtrend. So best times to buy when it's coming into the lower zone and starts to move back out again in the short term. Doesn't always work depending on where you are in the trend, but that combined with the medium and the longer term breadth measures can be really useful signals to look out for. So we'll talk about that a little bit more in the breadth section of the video. Nasdaq 100 also up around its all-time highs there, testing. So at the moment, really strong over the last 9 weeks or so, but a little bit extended in the short term here. You can see the strong move that it's had over the last year to date, compared to other years when we've had a stage 4 decline, a negative year, and then had a really strong positive year. The following year tends to be more average, so doesn't necessarily mean it's gonna continue to go up in a straight line by any means. You could have obviously a negative period and could recover. It could be a choppy year, but it tends to end positive, but more in a more average sort of price range. So don't expect 250+% years back to back in the Nasdaq 100. It's quite a rare event. So more only the 98-99 period, I think, was when we had 2 back-to-back really strong years. But for the most part, a negative year and a strong year is normally followed by a more average year. At the moment, 85% of stocks in the Nasdaq 100 above their 200-day moving average. So obviously continuing that stage 2 theme at the moment. But as I said, testing the all-time highs here, so some kind of pullback would be healthy back towards the moving averages, but again, we will see if that comes or not. And if it does, we want to be watching for the relative strength in the various stocks and see which groups and which themes emerge as potential short-term leaders as we go into the new year. Daily chart, similar position to the S&P 500, just sitting above its +2 ATR level at the moment. So continuing in that short-term uptrend and 86% above their 20-day exponential moving averages there. Look at the Nasdaq Composite, nowhere near those 2021 highs for that. Still fair way off. So we get the percentage up on that one. This has been held back more, but it's still 7 or 8% off of the highs. Nasdaq Composite is held back more because it has quite a lot of what was last year's lagging group, which was the healthcare stocks. So that's why this has not been quite as strong as you see with the Nasdaq 100, which the mega caps were some of last year's biggest movers. But at the moment, still in the stage 2 continuation, a little bit extended in the short term, but not too extended, not above the 3 ATR level. Once again, in a strong uptrend, above the +2 ATR level, so a pull back into the 1 ATR area or back to the 21-day moving average, keep this short-term uptrend intact. If it does come back further than that, then support back in the 14,400 area from the previous highs from earlier in the year. But at the moment, 72.92% of stocks above their 20-day moving average in the short term, so in a strong position in the short term. still in stage 2. NYSE continuing to move higher in early stage 2. We've had a few failed stage 2 attempts for this year, and this is the strongest of the stage 2 breakout attempts that it had through 2023. You can see that the broader range that it sat in through 2023 has now been cleared fairly significantly. So if it does start to pull back in again, we wouldn't want to see it to come back below this major area that had been tested so many times throughout the course of the last few years here. So if it does come back in, we don't want to see it drop back into the 16 or the high 1500 area. We want to see it hold, rebound, any kind of, and push back up into making a stage 2 continuation. But the 30-week moving average still rising, the 10 weeks above the 30 weeks, so we're in a good strong early stage 2 position for this at the moment. It's still a little bit off of its 2021 highs at the moment, with 72.66% of stocks above their 200-day moving average. Daily chart continuing strongly. You can see that above the ATR levels here, so still again above its 2 ATR level, above the 1 ATR level, so in a strong position. Room for a pullback if it needs to, and 82.02% of stocks above their 20-day moving average there. Russell 2000 finally breaking out of the broader range. So over the last year and a half, since the June low back here, started to form this broader structure. Did make lower pivots here, so the actual range, we had a failed stage 2 attempt twice before finally pushing out on the third go and actually starting to clear more of the longer term resistance. Percentage of stocks at 71.67% above their 200-day moving average in the S&P 600, which is the small caps, but not the same as the Russell 2000, a little bit different, but the only one we've got the breadth data for, so it's useful as a proxy. Again, if this starts to pull back in again, we don't want to see it come all the way back into the range. It does dip back into the range a bit, then ideally holding in the upper range and rebounding back out, making a stage 2 continuation. But at the moment in a strong position, but short term extended, so a pullback once more would be healthy in this one, would help some of the stocks that have had really strong moves over the last 2 months start to set back up again. You'll note there's been a number of cup and handle type patterns forming after stocks that had big pullbacks and then had strong rallies back up and out again. I'm starting to notice more of those kind of patterns, which we haven't seen for quite a while. So if the market health continues to be in a stage 2, then we could see some of them start to make continuation moves. But something to take note of. The VIX still in a reasonably strong position around the 12 level, well below its 200-day moving average, so in a positive environment down here. If it starts to push back up above recent pivots, then that would be a warning sign, but at the moment holding in there, so in a positive position, but with the S&P 500 fairly extended in the short term.